Um, here's the link. I'm gonna put it in the announcements here.
What's that?
Yes, it looks like it's working, so great. Let me put the link here for everyone to join. If they are, you hear me well, Glenn?
I can hear you fine. I have you in speaker.
Okay, and I hope that the recording will also record your voice as well.
Let's see.
Okay, I put the URL in the announcements, so let me know when you got that in.
I'm trying to. Is this in general, right?
It should be in announcements, but I could put it in general too.
Hold on. Let me see. Announcements.
It should be the one above it, the tab.
Today's the 9th, right? Okay, never mind. You know
Yes.
what?
And I will just message you it too for now. So
I I don't see the. Hold on. You know what? I don't see it here.
okay, did you get a message from me?
Let me see. I'm looking. Hold up. Okay, there it is. I saw a message from you. Okay. YouTube. Is it the? Let me type the URL in the.
Yeah, or you could just copy and paste it from there, but might be faster.
Are you doing Discord through a laptop?
No, my PC.
Okay, YouTube.
And let me know when you see my screen. It should be 6 tabs or so. Um, Flying over Colorado is the, I guess, first screen, kind of.
Is this Okay, I got. Yeah, I got it.
Okay, perfect. All right, so I think it's just you and me for this one, brother. Which is
Oh,
great. Flying over Colorado is the, I guess,
is that
first
you?
screen, kind of. Yeah, that is
Is
me.
it,
Looks like I'm hearing myself too echo.
Okay, I got. Yeah, I got it. I'm hearing myself as well.
Alright, so I think it's just you and me for this one, brother. Um, uh, I don't know. That's gonna be Flying over Colorado is
Good.
the,
Maybe I should mute this,
I
right?
guess, first screen. Yeah, you can mute it on your side because you hear me anyway.
Yeah.
Okay. Okay.
There it is.
All right, great. So, well, let me go through the presentation again. I'm not going to go through it exactly how I did it the first time because it was pretty much a free form, more or less. So, yeah, hope you're doing good. I am too. And, yeah, so first, Bitcoin. Bitcoin has been around since what, 2008? It emerged after the Great Depression, the 08, 09 market collapse of the housing market, and essentially it has been a mainstay of crypto. It's the first coin, therefore it's the most authentic coin, and it is essentially the most known coin as well. So the cycle, um, life similar to this video, goes in cycles. You have seasons, and it is no different than the stock market or the crypto market. And then today we're just going to cover pretty much Bitcoin, because Bitcoin does act as the power plant of the market. The market moves in waves and cycles in relation to Bitcoin. Of course, there are some outliers, but this is a good foundation to build upon, right? So the Wall Street cheat sheet is the first sheet I'm going to show you. And I did make, do you see it on your screen?
Mm-hmm.
Okay, so I did make my input here of where I believe we are in the cycle. First, let me just explain briefly. I mean, you could obviously read, but the first phases in a cycle is essentially, yes, the disbelief. This rally will fail like the others. It does move up slightly, and every cycle it does start at a higher top, because over time the prices do move up and into the right. So that's where I believe we are right now. It did move up from 15,000 was the low in 2022, and it's been slowly moving up from there. Right now we're at 26,000, which is essentially where the comparison is from the absolute bottom, like it would be here. 15,000 would be the comparison in 2022. So we're somewhere here to here, and I believe we're about to get the final dip, which is right here, and that's considered a spring and Wyckoff method, which we will be going through that as well. Into the hope phase, a recovery is possible. These are like the emotions you think investors are thinking. The herd, the masses, the average Joes, right? As a sophisticated investor, you want to be analyzing them, but you do not want to put your own emotions in. Of course, it's a lot harder to do in real time, but in theory, over time, that is how you get an edge on this market. So this is the September to October time frame that I believe this will happen. So that's only like a 2-month time period, which we are in now. This hope will probably happen around, which is a significant higher high than the disbelief, into April of 2024, which is the halving event. And
Let me ask a question. So that hope right now, if we do decide to buy it around that time, would it be a little too late for us? Because right now we are in the disbelief mode, which you say probably the best time to join in opposed to the hope.
So price wise, it would be much better to buy it down here, because I believe if we were to wait for it to actually move up into 30,000, 35,000.
It's gonna be a little, right?
Right, so if I just use my calculator, right now we're at 26,000, and if it
We're in
goes
the
up to 35, so we'd be at 74% less. So we'd be buying at a 25% premium compared to just prices now, compared to 35, just for a simple scenario. Although I do have price targets below 25, so even if, preferably that'd be even a better price. So 24 divided by 35 instead, we'd be more than 30% cheaper.
Because right now we're in a disbelief mode, right? Or am I
Yeah,
wrong?
yeah. I mean, of course, it is a little subjective, but if we were to compare, and that's a great question, and I'm going to put it side by side now to the chart. TradingView is the best to look at charts. I understand it is messy. I'm gonna clear it up for everybody so we could see it clearly. I think last presentation I kind of showed quite a bit of 2017, but we could go towards now the current time frame, which is like this year to last year. So up here would be, that's an easy one to see, euphoria. Complacency is right here, right?
Hmm?
It goes down, tries to maintain those levels, but drops right here, euphoria at the very top, goes down, moves back up to maintain those levels. However, it drops. Anxiety, why are we dipping more than we expected? Denial, my investments are, good. It will come back eventually. Panic, eventually here. Once it just doesn't stop. Capitulation, everyone get out. That's essentially the capitulation mode. I'm getting out of this market. I can't afford to lose more. People are selling 50% down. You know, whereas up here in euphoria, people are saying, sell your house, buy Bitcoin. And
Hmm.
it happens all the time. And you hear, this on YouTube or whatever. There's so many examples of people doing that. So that's the worst time when it seems obvious, right? This is when people think they're geniuses, max
Right.
greed, right?
Like where you have your pointer, would that be the euphoria? Would that be like considered a euphoric state where you have that pointer?
Right at the top. So anywhere up here,
That'd be the euphoric stage, okay?
because it already
And
moved
then
up. When it's
yeah,
moving up, you're not one of these lower ones. You're, of course, on this left side. Optimism right here, belief, thrill, euphoria. So we know we're not up there because, I mean, we just crushed down. So essentially, we've had our capitulation, anger, and it's been moving slightly up, but not, crazy. So that's why I believe we are at this disbelief where it does move up quite a bit, but not crazy.
okay.
So that's the comparison. Now, I did have a chart that kind of showed, here we go. I marked it out for us. That way we could kind of
So that stuff right there,
see.
just kind of the depressive mode, I guess. The anger already in the dip, the valley. I call it the valley, I guess, since it already dipped down. Let's say it already crashed, right?
You mean at the lowest possible?
Yeah, there we go. I like that.
Yeah,
That's a good one.
so the lowest possible would be right, this area
Yeah.
towards like anger, depression. So unfortunately, that time has already passed, and that's that 15,000 I said earlier, right there. If you see on the right side of the cursor, 15,700 or so, and then you put my cursor right on the candle. If you look
Mm,
above, it says OHLC.
hold on, wait. Let me see. I can't see the OH. Where's it? I see BLX,
Right under
OHLC.
that. Yeah. So O means the price that it opened at, which is at 20,909. It's just a detail, nothing you gotta really know for this kind of I guess summary. But essentially it went all the way to the L, which says 15599, about
I,
15,600.
I don't see it.
It's
I
do
just
you
see
see Brave New Coin liquid index for Bitcoin?
Where am I seeing that? Is that like in the top or
Yeah, you should be seeing it right here.
where?
The L up here.
Like pointing the cursor.
Yeah, that my cursor is on it.
I don't see it.
Do you see the chart?
I do see the chart. I do see the red candle.
Okay.
Oh, okay. Hey, there you go. So that's what you mean. OHLC. Okay.
Yeah, all the way up here.
Yeah,
It's
I'll say
just
open.
a little detail, basically, if you want to go that detailed, just to see how low it actually went. But since we're on the
So
topic,
okay.
anyways,
Okay.
if that was the lowest you could have gotten, so
25 and the current is 25.9083.
correct. So we are pretty much at this point of disbelief, and if you see, there will be an opportunity for it to go down one last time. And I explained on last presentation, I use Fibonacci numbers to determine that. I just turned on this orange moving average, which essentially is the 21 moving average, meaning the line is an average of 21 candles. And I currently have my chart on the week, the W here, meaning 1 week, meaning every candle is a time slot of 1 week. And so therefore, the orange means it's an average of the past 21 days, meaning the price average of the 21 weeks. So it's a
So one
very significant price data because it's essentially taking 21 weeks, half of a year data, and averaging the price for you.
So let me get it straight. One candle, just one little stick. That's for 1 week.
Correct.
Or you mean the whole 7 candles equals 1 week since it's 7 days for 1 week.
One candle is 7 days, which is a week. It's
Oh.
it is the yeah, and we could put it to monthly too. Um, so we could put it into a lot of different metrics. I put it weekly because it's obviously a lot easier to see a bigger time frame like the weekly compared to this chart. Like it looks identical, right?
Yeah.
99% like it is.
Yeah, you can, yeah, I see it. I never understood the whole bull trap thing.
Okay, that's a very more advanced for I guess what we're kind of doing here. But bull trap just means it's trapping investors that may be quick to go back in just for the market makers to pull the plug. The reason why I put euphoria times 2 because we already had euphoria here. It went down and essentially had a sophisticated bull trap because it only went up maybe $1,000 more than the previous high.
So
So
basically, it's like
textbook bull traps are about 50% of a rise, meaning a dead cat bounce, and that's yeah, it's more complicated, and I mean, I just don't want to get lost in explaining all that. Of course, I don't mind, but we'd kind of be stuck on this topic if we were to go down that route. But go ahead.
so basically the bull trap. It's like they did a quick pump, and then boom, pull the rug underneath their feet, and then we dip.
Right. So if you
For
look
this,
at this 21 week, every time we're above it, even going back to 2017, this is like 2017 right here. You see how every time we touch this line, we bounce over it? That signals it is still in continuation moving up. But until we candles below the 21 weekly, that was the start of the bear market. So this candle here, it actually closed.
okay.
below the orange line, and we just kept on going down until we went above it for 420 days, so over a year. And you see the first time we moved above it again, it was decisive. And then we rallied from this point on a good 150% until we closed it decisively again here on this date, Monday 23rd. And then we followed up with more downside pressure. But until we convincingly moved up again, like right here on April 27th, this was here was a bull trap. It did go above it, but it did not maintain those levels. And just real quick, I'll show you it's a bull trap because it stopped right here at the golden ratio of the Fibonacci number 786, right on it. You see that perfect line on it?
Let me see. Can you make it bigger?
This orange line on the top where it says 786 and about 10,000.
Yeah.
So it stopped right there. And as soon as it touched that number, it crashed.
It did.
63%. And that was the spring and Wyckoff method. Or if we're going through the Wall Street cheat sheet, that is this point, this belief. That dip right here you see with the arrow. And that arrow is, I added it so we could just pay attention to it. And that is like essentially the best price you could get other than at anger phase, capitulation phase. Right here, capitulation, capitulation, anger at the very bottom, anger at the very bottom. And again, we already passed that point. Capitulation, capitulation, anger at the very bottom, anger at the very bottom. So put an arrow here. So we're looking for that final major dip. Just like here, I put an arrow to look at that final dip. And that's why I'm putting my targets
Right there.
accordingly, 24, 23, 22, because I don't know exactly how, yeah, right here, exactly where it's going to, you know, end. But if you see this line, this major trend line has been playing out since 2017, so over 5 years. And if we were to magically go, not magically, but if that's like basically a very strong trend line, a 5-year time frame. That is what, 365 times 5, about 2,000 days, right? 1,800 days of a trend line. So that's significant, and that's where I believe the final touch point would be if we were to get that low. We almost got that low during the anger here in November 2022. But if we were to get it now, it'd be about 19,000. That's why I have my final buy target at 19,000.
Bro, this is one. Okay, I'm gonna interrupt you. I love the way the whole orange line, how you're able to read that, because I have a hard time reading that, like when to buy and sell, or like when it's dipping. And the whole, I need to show me more, or I need to keep asking questions and how to analyze it. But on the anger phase, I guess this is the Wyckoff method, and it's 19,000. This should be the least or the last cycle of it.
Well, we're just using the Wall Street cheat sheet for the emotions right now, but we should definitely go to Wyckoff next. So let me put up my Wyckoff.
Wall Street. So this is a Wall Street cheat sheet right now. You're
The
showing me.
diagram. Man, I should really clean up some charts here. It's because these are good for like general time frames and general, but unfortunately, I could just pull up a new chart and we could just go through the Wyckoff method live. Oh, here we go. Perfect. This is fairly clean. Okay, so yeah, we were going through just here the Wall Street cheat sheet, psychology of a market cycle, simplified market cycle. So we're trying to stay ahead of everyone else by knowing where we are on the map. So that's one of the recipes. But you never want to go with just one method. So that's why I don't go with just a Wall Street cheat sheet. But the reason why I do it is because, well, it works. It works for stocks and it works for crypto. So if I were to just quickly go to stocks, S&P 500, okay, let's identify where we are on that. So easiest is euphoria right here. You got, well, while you're going up, you got hope, optimism, belief, thrill, euphoria. And then it finally crashes down below the 21 weekly, the orange line. It did pop up just for a little bit. It did not maintain it very long. Only 3 candles. That's only 3 weeks. And that's where you got your complacency. We just need to cool off. This is where people are thinking. We're coming back up. But if you actually look, that is a bull trap. If I were to... I really don't want to go through the bull trap thing because we're just going to waste time. But if you see, I just pulled up a Fibonacci again. And it stopped right again at the orange line, the golden pocket, which last time in our scenario was the Bitcoin 786, right? Remember? And the orange line in I forgot what example it was, 2017, I think. Anyways, it does not. This is how you determine if you are another indicator that you are not going to essentially continue your bull run. So that's the indication, because as soon as it stops here on the golden pocket, the orange lines, do you see the orange lines, the 718,
Yeah.
702 and 786, it popped back below the 21 weekly and it just started falling off a crater. So if I were to use that measured move from where it stopped to the very bottom, you went down 25% on the S&P, which is very significant for the S&P. But we could just simply, for now, and let me clear the chart a little bit more, just focus on the psychology aspect. This was complacency, anxiety, panic, capitulation, and of course the very, very bottom that you get it, anger. And then we're moving up, but not too much. And that's where we're at too. We're at disbelief on the S&P. And the
I
S&P is essentially the market maker of the stock market, right?
Okay, S&P. As of right now, the S&P 500 right now.
Yeah. So it
Okay.
could be used on stocks or crypto, essentially, is what I'm trying to say. But we're not focused on stocks right now.
We're just focusing on crypto.
Well, because with the S&P you're gonna get what, 20% versus crypto or Bitcoin, we're looking at hundreds of percents, fairly easy.
Yeah.
If you know where you are in the map.
Yeah. Oh yeah. Yeah.
So the 21 weekly is very important, really. It's another indicator you can use to determine Are you in a bear market or bull market? Because if I were to go back quickly on the S&P, every time we drop below it, that signaled down, bear market. But every time we're actually maintaining above it, like here, we just go up. All right, so let's go to Wyckoff method, my personal favorite. I don't really use the Wall Street cheat sheet too much because once you know your phase, that's pretty much it. You don't really look back too often, maybe monthly. So Richard Wyckoff was born in 1873, passed in 1934. He was an early 20th century pioneer into studying the stock market. He is considered one of the five titans of TA, along with Dow, Gann, Elliott, and Merrill. These guys pop up a lot in people's theories and methods in the stock market. I personally use Elliott as well. I did not really go through it in any either presentation because there's just not enough time for like an hour presentation to go through everyone's work. But my main focus is the Wyckoff method, and that's a lot of what I do goes through his lens. So you could definitely read about it, but yeah, he observed the market activities and campaigns of legendary stock operators of his time, including J.P. Morgan, which is Chase now, and yeah, he is massively respected, and his method works. It really does. So now let me show you. This is his method here, and I'm just going to simply show you the key points. There's a lot of acronyms here. PS means preliminary support. SC is selling climax. Or in the Wall Street cheat sheet, that's anger or capitulation. Automatic rally or automatic reaction. And then into a spring, and finally it leaves. So the main four we're really going to focus on here is the preliminary support, selling climax, the automatic reaction, and the spring. So I could pull this side by side. Let me X this Wall Street cheat sheet. I don't want to get stuck on one subject. I think we covered that fairly well. I'm going to pull up my chart again. So it does not show on this chart, but BC means buying climax, or in the Wall Street cheat sheet is the euphoria, right? It's the absolute top.
Mm-hmm.
That is the worst place to buy. And these secrets that I'm saying, YouTubers are not really going to show them or go through them because they're there to get likes. They're there for people to follow them because at the end of the day, someone has to buy the top. This is a
Yeah.
one-sum game.
Mm-hmm.
Meaning 5% of the 100% of participators, investors, essentially rake all of the profits, while the other 95% are, going to lose money, essentially.
Yeah, true.
Because they don't want to learn a skill. They come in because their grandma or their friend from, work says to buy Bitcoin or buy Dogecoin. It's going to go up 1,000,000% tomorrow. When they don't use any analysis or any sort of map, which I'm trying to teach here. So, anyways, so you got that buying climax. It does go down straight, almost like a straight line, like a lightning bolt, into the preliminary support, right there, going down straight, almost like a lightning bolt. into PS, preliminary support. It tries to maintain this level, and you could actually confirm it here with the 21 weekly on the orange line. You see how we're doing confluences of methods and indicators together? It tried to go above the 21 weekly. It failed, and then it fell off a cliff. Just like here, lightning bolt, try to maintain those levels, try to get higher here, was not successful, and fell off a cliff. Fell off a cliff. Selling climax.
I'm not seeing the lightning bolt. H down.
I
don't get
looks
it.
like a lightning bolt here.
Oh, okay. Never mind. I get it.
It just
The lightning bolt. I'm looking at the candles. I'm going, they're all looking down. They're I don't see the lightning bolt. But okay, I see the what do you call that? The thing. Okay.
Let me try to find an emoji. Let's see. Is there a lightning bolt emoji? Here it is. Let's see. And this is very experimental here, just for fun. Kind of looks like a lightning bolt, right? If I were to move it in the back, let's see. Anyways.
That's pretty creative how you did that.
So there it is, actually. So
let's see
if
that.
I were to actually make it more precise, there it is. So lightning bolt, try to maintain. It did not maintain that 21 weekly. Then it crashed into the silent climax or the anger phase. Boom, into the anger phase. So,
bro, I like that.
So next is the AR, which I labeled here AR. And the AR, of course, there's more indicators to use, but essentially it's rising up, right? And to eventually crash down into a sideways action, which we are right now sideways. So we're looking for that spring. That's why I labeled this spring. And then I put a circle to indicate I'm expecting it to go down here, somewhere in the 22, 23, and even below that, maybe 21.
Are you talking about the current price right now?
The current price is 25 or 26 about, right?
Mm-hmm.
And as you see, it is below the 21 weekly moving average for about 4 weeks straight. That's very significant. So it should be heading down. And that's why I marked this circle in anticipation that it'll come somewhere in this circle. And that
do you think
spring.
Do you think it's gonna go down to like maybe 10s or 9s?
I don't, because there's a lot more buying pressure here. Like if it were to go maybe 16, I would see that 16.
Oh man, that'd be awesome.
I don't think so. No, I'm not putting any price targets down there because that's just, I feel it's greedy.
It's too greedy. Right?
I think so. I think so. Because if you look at the spring of 2017, and in this diagram, the spring actually goes below the selling climax. But in a lot of iterations, like here in 2018, it did not go below the selling climax. And that was the spring here.
So the sudden climax is like basically going towards the spring phase.
Selling climax, automatic rally, and then probably a couple STs, which, anyways, yeah,
the ST level
first,
like in the
and then spring. It just means secondary test. But yeah,
like ST level.
So automatic rally first, and then is the spring.
Automatic rally, What does the ST stand for again?
Secondary test.
Secondary test.
So it just means it's testing. If you look at the right side of the diagram, it's testing like support levels. Test. Right here's another test. You see this line connecting to this line? Horizontal levels are best. So in real life, another test would be probably right here at 18. Because we're using this as a floor, right? You see how these candles just, this is the floor here for approximately since June of 22 to about October. That is what, 3 months or more? That's how we know it's a floor, because it built a range there. So we could put a ray right there, and that'll be just like how this diagram is, where it could potentially stop. And that's how you do technical analysis. You're using significant pivot points like that to determine your bottoms. And that's actually right where I put my last buy order, which is at 19. Now this line is essentially about 1800, 800, I mean 18,800, right? But 19 is perfect for me. I'm not trying to catch the exact top. And in real time, it doesn't actually do it perfectly anyway. So if I were to go back on 2018 to try and find any pivot points, like STs, are you calling me? Yo.
Yo, I did not hear a word, like a word for a good 30 seconds because my little brother was calling me.
Okay, so you want to do it over the phone?
30 seconds?
Okay, are you still on Discord?
Yeah, it's on Discord. But I had you on mute, so I was like, I was talking on the phone, but then I had you on mute. I was like, you know.
Okay, so I'll come back into the Discord then.
Let me see. Yeah, I have you in Discord. I have the Discord muted.
Okay, so shall I hang up here?
No. It's fine. I hear you better like this, and I'm just remember like. Hold up. Do I have you in Discord still?
I see you on Discord, but
Because can you hear me?
I hear you on my phone.
Oh, then how? What the heck? I'm lost.
Okay, how could I
Okay,
help?
let me hang up on the phone.
Okay.
Or would be better on the phone or which one?
I don't think so. Alright, let me hang up here.
Okay, we'll go back to Discord.
Okay, do you hear me? Do you hear me now? Alright, hold on here. Let me pause the stream shortly so I could get some AirPods, okay? Okay, do you hear me? Glenn. Let me call you, actually. I guess we could do it that way. Hey, you hear me now? Okay, I'm not sure what happened on your end there. I guess picking up your brother's call kind of reset things. Anyway, how about now? Okay, great. So if you ask any questions, I'll just reiterate that, because since being on my AirPods, the questions are not shown. So going back in 2018, pivot points here would be this trading range here, the resistant levels, and the bottom levels. And that's exactly where the spring came. Right in between there. So anyways, this is kind of more advanced, not really. I feel like we're kind of getting lost in the sauce here. But yeah, I don't think we will break 15,000. Definitely not 8,000s, 10,000s. All right, so essentially I think we are here on the automatic rally, heading towards the spring. And that's where I marked it. And the spring usually is super fast, just like in this example. It is super fast. You got maybe 1 week at most to buy that dirt cheap level, and you essentially never get that level ever again. Right, no predictable way at least. So, and if I were to go back even more in time, just so we're at it, the spring here in 2015 was right here. So this is 2013. So let me go ahead and label it as per Wyckoff. So buying climax here at the very top, going down like a lightning bolt into the PS, preliminary support. It tried to maintain those levels. It popped above the 21 weekly for a short time. It did not maintain it. And as soon as it crashed below it, you see this big candle. That was a minus 15% day. This means this 21 weekly is very significant. As soon as it crashed below it, boom, selling climax. It just went straight down like off a cliff. So this is our selling climax here. This is essentially the anger phase of the Wall Street cheat sheet. Euphoria, complacency here, capitulation here, anger here. Automatic rally into spring. So do you see how it's very similar? You want me to put another lightning bolt? Your visual. Let's put it, all right, real quick. So let me go ahead and put a lightning bolt. I'm gonna send it to the back so we could see it. And it actually is very similar right there. So lightning bolt, but anyways, if we were to go back where we are now, the lightning bolt is right here. So we're definitely not in the lightning bolt. We're definitely not in PS. We have had our selling climax, which is actually right here. So let me tweak it. Our AR automatic reactions right here. So we're looking for STs now, but essentially we're looking for the spring. And that's why I put those targets there. If it dips below more than I think, well, then it dips more than I think. But essentially, we're at basically the rock bottom essentially soon. So anything below 25 I think is a fire deal, and that's why I think so. Because the spring is a fast moment in time, and essentially from there it's going to have this like V-shaped recovery into the next bull phase. And are you familiar with the Bitcoin halving? Okay, you want to ask me a question before we head to there? Go ahead. Yeah, season-wise, okay. Yeah, it's kind of like a winter phase because essentially it's just going down, right? Okay, no, I get what you mean. And the analogy, like the start of it going down essentially is kind of like a winter, right? And I marked it from here, the first moment we went down, all the way to the very end at the silent climax. That is 378 days, and that's typical of what we always get over a year of bear market before it actually moves up. So that's aligns to every iteration of Bitcoin. And here we are. Into the spring, like you mentioned, spring is kind of like that short time in real life. Into what's next is summer, bright, right, vibrant, and that's essentially prices go up, it's bull, people are happy, bull phase. All right, so the Bitcoin halving is in April of 2023. So real quick, let's go through that. And I know this is very, very messy, but just pay attention to the blue up and down lines, okay? The blue up and down lines is the Bitcoin halving. And are you familiar with the Bitcoin halving event? Okay, so let me take down this Wyckoff for a moment so we could just focus on the Bitcoin halving. The Bitcoin halving is an event where every time there's Bitcoin coming into the circulation, it is now cut in half. So at one point, I believe it was 50 Bitcoins per verification, and then it went down to 25, 12, and from there it'd be 6 point, what's the math on that? 6 or so. So it just gets cut in half, and it's a big time because it's exciting. Everyone is going to be posting videos on it on YouTube, TikTok, right, and even traditional news. Everyone's going to be buying it for the anticipation of that event. And as you see here on the screen, there's a blue line that goes up and down right here, and that's the Bitcoin halving of 2016. I labeled it right here. and right here on the bottom. It's a blue longitudinal line, I think. Yeah. Horizontal is left and right. Longitudinal is up and down. My cursor is right on it. Okay, well, this line here, let me make it bigger just so we can focus on it. You see this big line? I can make it another color if it helps. Pink. Okay, pink. So this, you see this big pink line? I'm going to take off the moving averages right now just so it'll clear up the chart a little bit without even using the moving average. As soon as we hit this line, essentially very few instances it just goes straight up. Essentially it's basically a start of a bull run. So if you were to buy at the Bitcoin halving event, just for an example, if we were to buy it here on July 4th of 2016 at $650, wow, what a time. And of course you're not really realistically going to get this full move. It went up 3,000%, so that's 30 extra money with just Bitcoin. Something more realistic is probably 60% of that, because we're going to be using Fibonacci levels to cash out routinely. Very similar to how we buy in phases, we're going to do the opposite and sell in chunks as well. But 30 times 60% of that, I'm going to times it by 0.6, is still 18x. So yeah, I mean, put in 1,000, you get 18. Put in 10,000, you'd be 180,000. That would, well, if you put in a grand, that'd be about 18 grand on average. Yeah, that's right. And back in 2016, if you were aware of it in 2016. So more recently in 2020, let me make it pink now. The Bitcoin halving event in 2020, I remember I was at my girlfriend's house at the time, watching this event. 9,000 or so was the price. You remember that? Oh, so I was talking to you around this time about the price, huh? So right. Well, Bitcoin, you could buy it in fractions, so you don't have to buy a whole Bitcoin. You could put it in as low as $100, $50, right? Anyway, so if you were to buy it at this Bitcoin halving here, and to the very top, it's about 675. Yeah, 620 on that first move up to this high, or at the very top of the second time it went up, it's about 670. So anyways, if you were to get like even half of that, 50% of that, that's still 300%. So the law of diminishing returns states every time we go up more with market cap, we get less gains. So looking back at our numbers, the first one was 30x. This one was, this iteration here in 2020 was about a 6 to 7x. It's going down over time. So we're not going to get absolutely rich. Maybe this time we'll get about 3x. I'm taking the number from the halving date. I'm not taking the number from the spring. If you were to buy in the spring, like right here, that move up into the all-time high is 15x. So it's very important we buy at the best possible price. So fast forward to today, the Bitcoin halving is going to be in April. So let me make it pink and let me bold it so you can see. I know it's pretty messy, but we are close. And what happens when we are close to the Bitcoin halving? Well, we typically have lower prices going into the anticipation within a couple months. And that's why I believe the time to buy is between now and the end of the year, but mainly September and October. Yeah, you have a question? Okay. So theoretically, if you put in $1,000, are you saying you want me to give you an estimated how much you would get from like a price prediction? If you were to get it at like 23,000 and it goes to about 80,000 is what I believe we will get realistically. It may go up into 100,000, and this is what the media is literally going to say because it happened last time. So obviously they're going to say it again. Everyone on YouTube, TikTok, right? Even again, the mainstream news, they're going to say Bitcoin's going to 100,000. Could it go there? People are going to be talking about it. It might go there, but I think 80,000 is pretty realistic because Bitcoin always has price discovery. It's pretty much programmed. So the last all-time high was 69. I think it'll go at least to 80. So if we were to make that move, if you were to buy an average price of 23 into 80, I'm going to divide it. Let me divide it the other way. 80 divided by 23, that is 3.47. So about 3.5x. So if you were to put 1,000, that'd be approximately 3,000 to 4,000. If you were to invest 23,000 and buy a whole Bitcoin, then you sell it approximately at 80,000. I mean, you would get a profit of 57, right? Minus capital gains and all that, so maybe 50 some or 40 some. But yeah, you'd be definitely in good profit, and that's just Bitcoin, playing the safest cryptocurrency there is. You want me to do 3,000? No. Okay. One more time. But I just don't want to get lost in doing theories. 3,000 times 3.47 was the number, right? Right here. That'd be 10,000. Yeah. And you know, the prices could go to 22, 21, so your average might be, you know, lower than 23. But I just want to be a little conservative with those numbers, um, because I'm not trying to hype Bitcoin at all. It's really good for multiplying your money, but um, you know, we also have to keep our emotions in check, because I made all the mistakes in the book as far as just being lost in the sauce, waiting for prices to go higher because I think they'll go higher, and it's all just hope. It's not technical levels. Technical levels, we can use Fibonacci. It's a little more advanced for what I'm trying to show today, because right now we're just focusing on buying, not selling. So lastly, Fibonacci sequence. The reason why I use those numbers is because Fibonacci is a mathematician, and it was first described in Indian mathematics as early as 200 BC. So this is like ancient old, and that's why professionals use him, because he's well known, and well, it's just the fact of the matter. He's noticed that these numbers come up again and again in mathematics. The 5, the 8, the 13, the 21. And I use all these numbers. I just showed you 21 because it's one of the easiest ways to determine if it's a bull market, because I don't want to get too advanced right now because basics are more important than being advanced. But I'd use all of his numbers, okay? And lastly, before I stop it here, because I do have to go, I'm going to show you the Satoshi model of stock to flow. Essentially, this is the number, a chart that is described that because Bitcoin is being compared to commodities and precious metals such as gold, silver, and platinum, they are known as store of value commodities. Therefore, you could predict essentially over long time frames their relative scarcity. For example, it is difficult to significantly increase their supply. Bitcoin is 21 million. 21 is a Fibonacci number, by the way. And it's set in stone. For example, process of searching gold is expensive and requires time and resources. That's why they compare it. Bitcoin being the digital new age gold. You know, all these narratives are for Bitcoin, and it is for our advantage, because if we buy it cheap, those narratives are going to be what drives newcomers to buy, right? So if you look at the right side, every time it's blue, it just means the date from the Bitcoin halving. So 1400 is the red. That means the Bitcoin halving just happened. And in the blue is basically the Bitcoin halving is about to start. So if you look at every time it's blue, or dark blue rather, that's like the best time to buy, right here in 2012, 2011, sorry. Again here in 2015, dark blue. Here again in 2019, dark blue. And again here, we're in 2023 now, dark blue. And this median line, it's like a red line. It means it's the like fair value, I guess you could consider it. So we are well below this fair value. We want to be selling above fair value, and we want to be buying below fair value. You see here. sell above it or at least on it, and buy below it. And we are already below it, so even right now is not a bad time to buy. And this median price in 2025 will be in the 150,000. Can you believe that? That is what it's saying. So people are going to be using this model. 300,000 it says by March 12, 2025. That's in a year and a half. So I mean, it's possible. It's it's definitely possible. But again, I want to focus more on buying as cheap as I can now, and then worry about selling it later. Um, one step at a time. Once the bridge, it's time to cross that bridge. Start preparing to cross that bridge. Thank you. Thank you.